That's Meta.
In terms of the resolution and the relatively near term, we've seen photos.
QQQ has been juggling in between like 735-ish, 735.80 down to like 730 all day.
We have talked to cybersecurity experts who say the actual vulnerability.
That Apple call is probably not looking the best right now.
Security community is no resolution yet, though. Soon though, because it's not people out there, they're not capable model. They had it, anything answers.
Bro, I'm about to get so fucking pissed right now. This autocorrect will not let me type in some tickers. Okay, finally, goddamn.
At least from what last we heard, David Sachs over the weekend say the ball's in Robert's court. So we'll see what kind of sort of, I don't know how to put it. What kind of like, what kind of like, they are going to have to budge in some ways, and that's been the issue for months with
Zach.
What's up? Sorry,
You finally
I'm trying to watch MSNBC. I'm watching tickers. I'm trying to work.
Oh, no, you're good. I was curious. You saw that announcement.
No, I don't see anything yet. I know they were meeting at 11. I don't think the press conference was until 11:30.
Oh, okay. I just updated my ChatGPT, so now I can do a lot more with it.
I wonder if I should put a call in on SoFi if rates are going to stay the same. What, like mid-19? Like, hold on for a second.
So I said 1832 right now. Damn, this morning it took a huge swing up. You're right, it do be going from 17 to 19 all the time, like almost 19. Okay.
They also say that it will be treated within days. At that time period is extendable by mutual consent. I'm thinking that we could be caught in perpetuity. As I say, the White House is pushing back on the draft that has been reported on, saying it doesn't reflect the text of the actual MOU. JD Vance said this morning that the White House is pushing to release the text possibly as soon as today, but certainly by Friday. So we will be looking for the details there when we get more. Now, the president a few times today has suggested that some details MOU could still be shifting. He does say, though, that he thinks formal signing here in Switzerland on Friday will still happen. Take a listen.
This is just like a two-paragraph. This is a long, brief, detailed memorandum that goes into a regular contract. When they would do it, if they don't, then it's okay. But to start the process.
So we might have a deal. Gives Iran significant economic relief for securing verified sessions on the nuclear program, on the support for the proxies. This is what the president went to this war, into this war with. Is he actually results.
What do you think it's gonna go down to?
Stronger position. The text right now, we so much focus on it. Say,
So I think the last thing, sure, she's gonna want to do in this first meeting, after, with rates, this work, think it up. It's unclear. She.
you think it's gonna be short?
I would say I might keep it as short as possible. With regard to the statement, one of the things that's been kind of challenging is that I don't see anything. There is. So there's no easy buys.
And the iterated I want to say it's pretty good.
Are you there, dog? Can you hear me? I said $1,000 on Tesla puts.
Production size or have cities.
On what? Which one? The 400? The 397?
Ooh, the 400 maybe.
That gives us the opportunity to reduce the balance sheet.
Let's see.
Duration of the balance sheet, or it's a shorter duration, so moving.
That would only be what?
Kind of reduces the credit now.
I could only buy 2 of the 400s.
See, instead of recently.
Drew, when it comes to the equity market, are you conflicted right now?
I know this.
Honestly, I think I'm gonna just try to sell out of the one I have right now for a profit and then wait.
Damn, nigga, I just literally got into the 392.50 put as soon as you said that.
Oh, good, because we about to break 397. You should be up already.
Suggesting that negative.
The only reason I'm hesitating is because we got 15 minutes before the beating ends.
It's cookies are holding up the server. And so if you get to Julian,
I'm about to get in on another one. So right now,
I did a swing my expiration dates for tomorrow.
it looks like it's the World Cup to me, and as much as during the World Cup, I'm sure we're going to see sustained 1,000 gun gains for months. So the trend in growth is I think it's great moves up slightly as towards the end of the year. That makes sense. They're gonna look.
so there's still a bigger outflow than inflow. Look at my screen.
Yeah.
Is that backwards?
It doesn't look backwards.
All right. On my live, it looked backwards. It looked like I'm reading Russian.
Is that Tesla? That's S&P.
That's Tesla. The outflow is 921 versus 768 inflow, i.e., expect a little bit more downside because there's more sell orders than buy orders right now. But at the same time,
I'm down $10 on my put right now.
Let's say looking at the sentiment on the 60-minute, the 1 minute, and the daily, it's actually bullish.
Damn.
Don't trip yet. Because it's below the moving average, all three moving averages right now. On the 1 hour, it's below all three moving averages. And it broke VWAP. Yeah, even on the 1 minute, it's still below the 20-day moving average, is below VWAP, and it's below the 250-day moving.
These team to help the future. If we really can develop it, these the right sense at the right time. Take them to East on -40 for several days, then soak 35 inches of water. Bake at 120 Fahrenheit. Finally, serve on a flamethrower. Choose.
I'm not gonna lie, I don't like that last candle though. The fact that this candle right here is jumping on the edge of being a hammer to the upside, I don't like that. And it's already after 3 green candles in a row, but there's not much volume. That's the one thing. You feel me? The volume is not picking up.
On the 5 minute, it's red.
See, we about to flush through 397. I told you.
The 5 minutes red.
Oh, I like that. A hammer to the downside.
Leader in the character. Next to the benchmarks. This is fighting. You don't have
5 minutes dwindling between red and green.
This is Kate. Discovering that on a closet, your cat.
It's trying to find more downside.
Yeah.
All she has to do is sell what she wants.
Oh, bro, the outflow orders are still up almost 200 versus the inflow orders.
Okay.
Wear it.
Come on, just break 397, baby. Baby. There we go, 397. Baby.
397. 397.
We get 395. I'm out this house. Yeah, 395. That a nice $3 drop. You get a $3 drop. You hell me. I'm not gonna lie. I didn't find this play myself. I didn't trust it for the first 30 minutes because as soon as I bought it, look, bro, this is where I bought it at, right? You see my screen?
Yes.
This
hold
is I bought this bitch right here, bro. As soon as I bought it, this is what happened.
Oh no.
I said, bro, what the fuck? And then it went here, bro. I was down 80% on this trade, dog.
This nigga said, please, God, please.
I was like, I'm about to just go make a cup
He's
of
like,
coffee.
damn, nigga, damn.
So I'm gonna go make a cup of coffee and go sit down. And we started recovering.
My nigga Charlie said, hey, we gonna relax for a little bit.
I had to go to sleep on market. I had to wake up.
My sellers.
Only thing is,
10% right now.
if we can't flush through 397.60 in the next 10 minutes, I don't know how I feel about it. Because depending on what they said, this meeting right now, it might get a little ricochet bounce, especially because SpaceX is still up.
Okay.
It's like really all of this is just riding on people being uncomfortable with not knowing what the Fed is about to say. And so once they pick a direction, it's going to pick a direction. And if they don't do rate hikes, it's probably going to go up.
I'm probably about to. Fuck. Okay. Hopefully it has like a little flush real quick within this next 5 minutes, but this green candle, this 5 minute candle is green.
So you get the percent plus net. This
15-minute candle still looks like it's going down
You look like a 15-minute candle.
because it's going down. It's going down for real. You know what I'm talking about.
I'm not gonna lie, I don't really like this play anymore. I'm about to set a sell for $90.
I'm down 30 right now, down 10%.
How much did you pay for it? $75?
No, I bought a next day contract for
Uh,
18th. It was like $300 or $230.
if you got it for tomorrow, I'll give it a little bit more time. The mines are dailies.
Yeah, I'm not stressing. I'm not rushing. I still think it's going down.
If you look at the 30-minute, there's 3 big ass red candles, 1 green. If you look at the 15, it has a red doji right now. It's bouncing between a red and a green doji. Do you know what a doji is?
Yeah, it means that they're battling. It's in the middle. They can't decide.
Yeah. I will say there are 5 green candles versus 3 red so far on the 15-minute. So it is fighting to go up.
Come on, Tesla. Flush down, baby. Flush down, Tesla. Get down to 397 for me. 395.
On the hour, it is red as heck. Yeah, on the hour, we big red. Excuse me.
I think you'll see it with AI.
It's not trying to break this 397 for nothing, bro.
I think he does it or if he doesn't do it, we get time to do it. People are mostly to get their incredible.
But for real, after this meeting, everything should open up a little bit more.
We mean like go up?
No, have movement. Everything's pretty flat.
Data centers, they did some people sometimes opportunity with their life with data, but I think it's something that's going. And some of the time early, I feel like I would have taken I would definitely you never got to get you on the ambitious goal and time let me work in your favor, may take a little longer. Very or yeah. Goals.
You're saying this, I worry about around Elon Musk. What do investors you an advantage never lost? No management team.
Give a fuck who talk behind my back. Bitch knew better than to let me hear. Hands on my knees, shaking ass on my thigh shape. Hands on my knees, shaking ass. If you got a boy, right?
Reality is this.
I don't give a fuck who talk behind my back. Bitch knew better than to let me hear. Hands on my knees, shaking ass on my thigh shape.
I am floored by the amount of people who liked this comment.
Yeah, this Tesla seems like it's invalidated, dog. This shit going completely the opposite.
How do you make ChatGPT make the fucking paper and shit for you? Like, how do you just go to create image?
Create the paper. What paper?
Oh no, you guys always are putting stuff up on ChatGPT from ChatGPT, like this like fucking things that they make for you, the little cheat sheets and shit like that. Like mine only types me. How do you actually get images?
I asked for an image.
So you think I should get out this plane into another one, Chad?
I feel like it might be invalidated at this point. I'm still in it. I'm gonna hold it for a second.
So you never know. I hope it. Now,
looking at that $220 because there's a lot of open interest on that size, or sorry.
Yeah, I lost faith in this play, dog.
I'm gonna hold it for a little bit longer because my contract doesn't expire until tomorrow.
Okay, so they made their decision at 11 today, but the press release isn't until 2:30.
Yeah, that's 11:30 my time still. I'm guessing that the decision was decent because Tesla's going up.
For a few days, Rick takes possession.
Damn. Apple. I wasn't expecting that. I was expecting it to hold around 300.
What is it? Drop down to like 295 or something, 297.
97. It's about to break 297.
I'm glad I sold out first thing this morning.
I wish I would have, bro. I bought them, they jumped, and I held them.
I got on like first thing 9:30, and as soon as I saw it jump to like 302 ish, I was like immediate sell.
Nah, that's the smart move.
We'll get you ready for today's major Fed decision. What about Fed? Has been we just we're back in trade.
Accounts should also grow basic, the more essential fat reserves for people survive the quick winter.
If you're on Medicare and you get this, now this expected out-of-pocket costs, which for those on Medicare or soon to be is a good reason to charge your health care. So even didn't run your supplements. United even care schemes because they can pay you every day. And when it doesn't pay, then it dumps what pays. Really Medicare supplements by paying some of Medicare and make your out-of-pocket costs predictable.
Go down, Tesla.
SoFi is going nuts today.
What's happening with SoFi?
They're up 4.8%.
Shit, they're almost to 19.
Travel by sea to the Caribbean is a fruitful appreciation of 50% reduced deposit and book today.
Hey, about to sell this Tesla put. God damn it.
Restaurants stay safe. Genius can make our Genius, all the houses. Any business, that's genius. Big time, let's do it all the time. Get that house in Barrel Caribbean. Reading your financial goals can feel impossible. And help seize the northern hemisphere. The seasons advance without guidance. The brown bears sanctions and taxes in. It's credit card. You can count
An original never begins in machine
But it's literally something. Ridiculous.
all stage. So originality devoted.
When it comes
Never
fans being surprising,
We are just hours away from.
despite being classified as carnivores.
Flush, Tesla, flush. There we go. Go down.
Secretary. Let's bring it in mind just about the economist and macro strategist Vincent Reinhardt. It's great to see you. Welcome back.
Thanks, Brad.
So what are you expecting today?
Not much of anything in terms of trade. They're not going to change. Practical facts. The only those signs they take into South America. They inhabit woodlands along the edge of the plain.
Okay.
Bro, I'm about to sell out this.
I'm about to say Tesla's going to 402, dog. It's making a W on the 5 minute. It's low key making a W on the 1 minute.
I'm gonna have it for till tomorrow. Should I just sell out?
I think I'm not gonna tell you. I do think it's gonna recover back to 302. If I was gonna buy a swing, I'd buy it to the upside for real, for real.
I'm down 33%. I'm just gonna get out of it. Who's by the airport?
Me.
Oh, I forgot you still live by the airport. I was like, damn, this nigga. Jet life in the background.
It kind of look like a fucked up M and a W at the same time.
That's what I was just thinking, bro. That's why I was like, I don't want to sell because I have it for tomorrow, and you said it looks like a W, but it kind of looks like an M too, like the start of an M. I don't know.
All I know is if it flushed back towards 397, I'm probably just gonna get out. We broke VWAP again.
The reason why I'm really not scared is because I was looking at the patterns on Tesla and it goes up, then it goes down, then it goes up, then it goes down. Crazy. But it's not making higher highs at the moment. And it still is forming lower lows from the 5-minute candle.
If it breaks this moving average right here, we're probably going back to 397. But we need it to break at least break down to 395. That's a $4 move from where it is right now. with the fact that SpaceX is up, it's kind of iffy. But actually, SpaceX has been falling. Shit, I should have stayed in SoFi.
You could have stayed in SoFi.
I mean, I only had one contract, so I would have just made like $10 more. But SoFi was a nice mover today. I bought in at 18 cents, reached 39 cents. 100 of those would have been nice. Okay, so we're breaking the 20-day moving average. We broke VWAP. Is that a Head and Shoulders? Nah, yeah.
Have a good day, bro.
You too, gang. retesting VWAP right now. They're reclaiming a moving average.
Yeah. God damn it. I think it's forming another bro. Yeah. I think it's about to have a major push down.
it's at right now. And the smart option is telling me to sell. But for some reason, I want to stick around to see. And on the 5 minute, there's a lot more red than green. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. One, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. We got 18 red candles versus 14 green. I honestly, low-key wish I would have just sold out of it when it started to return the first time. Instead, I doubled down and averaged down. I bought 2 more.
Think if it hits 401, like around 401.79, 401.80, it's gonna go back down. To be honest with you, I think it will hit. Yeah, I think it's gonna go back down. Look at the pattern. Look at the pattern that it's been doing.
I think it's just gonna go sideways, dog.
Since 9:30.
I think it's gonna go sideways until after. And if they don't say anything bad, this shit just about to go up like $10.
Down goes. Watch it. Telling you, I'm right.
It's inside this triangle right now. And it's trying to break. I mean, it's done tested it 1, 2, 3, 4 times.
Trying to break down or trying to break up?
It's trying to break up.
Yeah, and if it doesn't break up, what does that mean?
I gotta go down.
Exactly. You should see my shit right now. Hold on, let me see if I can get on my Discord on my phone instead. Show you. Look at this. All right. Look at my see this trend line I have?
Yeah.
It keeps touching this. It'll go up to here, touch, go down. Go up here, touch, go down. Go up here, touch. So what do you think should happen now? I think it should go down, right?
I'm not gonna say right, but
And if you look, this is creating an M. This big ass M.
wait, let me see. Where's the M?
So touches it, goes down. This is the start of it. Touches it, goes down. So something. Oh, this is a W. No, nigga, look. It's an M. If this goes down, it's going down to where we want it to go. Maybe even lower.
And so I pretty much got the same line drawn right there.
So if it breaks it, then I know what I'm saying. I'm just saying that's what I've noticed. That's one reason why I haven't sold or anything, because I'm like, I stopped doing against what I think, but
It's moving slow. See,
exactly.
you got for tomorrow. You got a little bit more time. I got a day.
That's exactly what I mean too. I'm like, I'm not stressing because I do have until tomorrow, unless it like flies up to 450. You know what I mean? Something crazy as fuck.
It is stalling pretty hard at that 4019 line.
That's what I'm saying, bro. Like, I think what it is, I think it was supposed to trick people. I think it was supposed to trick people. People buying calls, niggas getting happy, and it's about to flush down. But
It kind of did.
we'll see. We're dancing on that line right now.
It kind of
Straight up
broke
twerking on it, nigga.
my trend line on the 1 minute. It's
Oh, it
breaking the
broke.
trend line on the 1 minute
It broke. It's over.
to the upside.
It's over, nigga.
It's been over. I already know.
God damn it, I'm selling my shit.
Honestly, the main reason I'm upset, this wasn't even my play, nigga. I'm not even gonna front.
I thought it was when I first did it. That's why I did it. And then after I was already in it, you were like, what is it? I was like, damn, dude.
This is not even my play. I was listening to this nigga that I follow. Damn, bro. That's a shitty ass loss. Part of me wants to just call it a day. Another part of me is like, all right, one more.
Bye-bye.
But I also saw
Fuck.
I saw it going back to 402 as well, though, so I can't even front. More so, I'm upset that I didn't sell out of my Apple shit this morning. Tesla wasn't the play. Apple was the play. Apple and SoFi was the plan.
Yeah, bro. It's over. It's over for that play. God damn. It's embarrassing. Nigga, sell my shit. Wow, it's not even selling my shit. Nigga, sell my shit.
You don't have to make it lower than the actual price. Oh, if it says
If it's sold
$14, all right, but say
down,
14.
fucking, I'm done for the day.
Trust me, I hear you, gang.
I'm done for the moment. 127 for me. I just trust your calls, and I was like, fuck it, Chuck believes I believe, but I didn't realize it wasn't your call, or I wouldn't have fucking did it. From now on, let me know that, because I just jumped in with the confidence that my nigga Chuck knows what he's doing, not, oh, he's following this other nigga. I should have really waited until it hit this level. I should have waited till it hit 702, like 90, almost 703, because that would completely go down. But yeah, fuck it. I'm glad I sold. Glad I sold, nigga. Come on, dude. Hold on. I gotta call you back. Tesla. I'm glad I sold out, nigga. This shit is crazy. I love you, Charlie. We're doing the opposite of whatever that nigga says next time. Yeah, opposite of what that nigga says. I was gonna say, bro, don't get in the put if it's QQQ. I'm looking at it right now. I've been looking at it all day, nigga. It's uptrending. Don't do that. Oh, you should have told me before, nigga. No. Bro, I don't want to tell you what to do, but I'd fucking get the fuck out of there. I ain't gonna lie. Puts is not it today. If you missed the first put session, it's not it. At the moment, anyways, everything I'm looking at, I'll stay the fuck. Bro, and honestly, this QQQ's been chop zone all day. I wouldn't have bought shit. I haven't bought shit in QQQ, and that's my baby. That's my baby. I listened to you on my play today and got fucked. Because it wasn't your play. Never give me another nigga's plays. I want Chuck's plays. Damn, Tesla went up, bro. I should have just fucking said, fuck it, we buying a call, nigga. We be up right now. Just getting out and hedging with a call, nigga. I didn't do it. I fucking bitched out because I lost so much money just now. I was like, fuck it. No, I'm done. I'm not trading anymore for the day. I know my limit. And it looks like QQQ is still fighting though, to be honest with. Oh, it's above VWAP. I would wait until what was the Fed decision? Hold on. In all honesty, I think it's going down right now. I think you're okay. I honestly think you're okay. Because even Tesla's dropping right now. I think it's going to come down, to be honest with you, and retest the 732 level.
That's what I was thinking too. It's 732.80.
Oh no, it's going to, bro, 100%, because it's going to go back down to VWAP. I don't
It's
think you
breaking
did a
these
bad
moving
put.
averages.
I don't think you did a bad put. Hold the fuck up! I gotta call you back. I gotta get this.
That buyers is trying to eat this up though. It had a nice little drop. Let's see if we continue down. Give me 60 about cent. I'm not liking it though. I don't like it at all. I'm just being patient. But I definitely don't like it no more. Okay. Okay. Nah, keep kind. Keep kind. Okay, we back at break even. We back to break even. Yes. That's what we wanted, baby. That's what we wanted. Yeah, that Tesla put ate me up. Ate me up. And not in a good way. I wasn't trying to get ate like that. Come on, QQQ. Give me that push, baby. Give me that push, baby. Go ahead and break. Go ahead and break. Come on. 733165. We want that 7300. 77328. Come on, let's get that push. 289, 290. Come on, 732, 732, 732. Yeah, I'm about to sell. I'm about to sell. Ah, you really about to reverse like that? Just break VWAP. Just break VWAP one more time. Yeah, no, I can't do it. I can't do it. This is really no volume on these flushes either. These small candles. Yeah, see, still wanted to touch right here. 73295. It can't break 730. 733.30. It looked like I need to just sell out for real. I'm not trying to take another loss like this today. It's so close. It's so close. This 1 minute candle really fighting. Oh, yeah, nah, we going back up. We going back up. This fight is so hard that I don't want to just throw in a towel. But this right here makes me so uncomfortable. It really tested my patience on this one, dog. Really tested my patience in my hands. I'm trying to diamond hand. I'm trying to diamond hand. Let's go. That's what we want. Break 733, 733, 17, 733, 20. There we go. There we go. There's that flush. Break VWAP, break VWAP, break VWAP, break VWAP, break VWAP. There we go. We broke VWAP.
Hey, if you guys look at SoFi, I just crossed VWAP. Do you think it'll have another breakout?
1 second.
What's that?
I said 1 second. I'm in the middle of trying to time some. I'm just gonna sell it. Think I should have stayed in it, but I don't like. Today's been a shitty day for me. SoFi. I would just sell it. If you're up, I'd sell it. Yeah, especially if it already hit 1859. What's your strike? 1850 or 19?
I already sold my contract.
Oh,
My question is, do I buy a call for maybe 19 for tomorrow? Because every time it looks like a cross today, it's shot back up by another 30 to 40 cents.
I wouldn't buy for today. I would buy for next week sometime.
Next week? Okay.
Yeah. Damn, I should have held that. Yeah, if I was you, I'd buy a $19 call for next week.
All right, it's in.
Damn it, today was horrible. This shit should have moved more than that. But a dub's a dub, whatever. Let's look at SPX. Ooh, maybe that's what we do. Wait for the news to drop. Oh, wow. SPX has been so flat, bro. So flat. How many cons of the SoFi did you buy? Just one?
Yeah, just one.
Would you make like 20 bucks?
No, it's 45.
That's good. That's good. How much was the contract? Like 20 bucks?
Hold on. Yeah, so I got a $19 call. Expiration date's the 26th.
I mean, the one that you already bought and sold. How much did you pay for it originally?
Oh, I don't know. How do I get to that?
You in Robinhood?
Oh, 44, but I sold it. I honestly broke even on that one. I sold it right before it tanked.
You sold it for the
'Cause
same
it
price
was-
you bought it for?
It was a break even. I didn't lose money.
No, that's straight. I'm just trying to understand. That's it. You said you sold it at 44 or whatever, so I was just trying to see where you bought it at.
For 44.
Oh, so you sold it at.
Because I bought it. Let's see, what was the price? It was around 18.20. Price went up to like 18.45. And then I saw there was a bull run on it, and the price dropped back down to exactly where I bought it for. I was in a meeting. I don't know.
All good. This shit's so expensive and it's not moving nowhere. QQQ just dropped like $1 from where I bought it at, and it's only gone up $30. I'm low-key sick. Just because it's more than, if you've seen in the text I put in the chat, I literally in the first 5 minutes opened like 35% up, and then I held. I still got an Apple swing for next week. I got some faith in.
What's your price target?
I see Apple breaking 300 again, easy. My call is for 305. Honestly, once we get news today, Apple might go ahead and start going back up for real, as it broke 302 for a second earlier today.
Yeah, it was like right off when the bell rang.
So right now it's in a consolidation zone. And on the 1 hour, my next target price is 301.70. Once it breaks that, it's going back to 305. Apple is similar to SoFi, where it kind of trades in a box range. It's like do. You feel me? If you watching it at the right time, you'll hit it like a slot. Really,
I'm wondering when SoFi is going to go back down, though.
just pay attention to the news for real. If it doesn't have any positive announcements, it's just going to retrace. People are just going to sell off just to protect profit. And for real, if you look at the 1 hour, you'll see last time it hit $19, it had a sell off. And the time before that, the last time it hit $19, it had a sell off. Yeah, I'll just pull it up on my screen. Oh, you see my screen?
Yeah.
Damn, I had that buy order set at 1769. But so right here, slide, baby. So stop. All right. So right here, it hit 1892, and then up here went to 1980. No more crossing. And then over the next 2 weeks, down, and now it's returning back up. April 28th, it hit 1880, 1890, and it broke down and came all the way across until May. You feel me? So down to 16, 1750. Why is my shit doing this, bro? So glitchy. Yeah, I don't know why it's being so. But yeah, you can see it happen like 3-4 times. Yeah, nigga, fuck out of here. I'm not buying shit that you say. Can you still see my screen, or I need to reshare it?
Give me 1 second. No, I can't see it.
You can see right here from February, it hit about 19, fell back down to 1496. April went up to 20. Over the next 3 days, it broke back down and it hit all the way as low as 1490. And then it went back up 1880 and came right back down to the 16, 15, 16 area. And now it's headed back up to 19. So I'm going to expect to retrace back to at least $16.40, $16 or $15.60. And so I'd either buy a next week for 19, and then as soon as it hit 19, I'll have 2 weeks out going to like 16.50, or even a month, 16.50. But at the same time, I'd watch for any positive news on it.
Okay.
But this is from February until June. It's done the exact same thing 1, 2, 3 times. Oh, that's crazy. This felt so slow. Low-key want to buy a 732 put on QQQ.
You see what you did with that the QQQ put?
Yeah, I sold out. I sold for a profit, but it's moving so slow. I don't like it.
It is moving really slow. I'm up 5% on mine.
It's like it's moved over $1 and it's only up like 40 cents. I kind of wish I had held, but at the same time, I don't like the way it was moving.
It has to pass this 730. If it passes this 730 to 80 732.90, and it flushes down and like confirms it's flushing down. See, look at that candle. It's gonna bounce off of the 730, like the 731 area. 731.80, 730.
It's falling out of the triangle. Yeah, it's just expensive right now. And it's not moving like price wise enough for me to feel like it's worth it. What is SPX doing? That's really what I want to look at for today, bro. As soon as they make this announcement, this shit gonna go crazy. So announcement's coming in an hour.
230.
So I could sell that call I just put in for a 22% profit right now.
Yep.
22% is a nice percent.
Take it.
Yeah. Yeah. You see green, take it. Damn, man. I knew I could make at least $50 on that put. I just didn't want to hold it.
I'm holding mine still. If it breaks this level, then the next level it has to break is
730.
730. Yep, 731. If you want to be, I'm being safe, like 730.80. You know what I'm saying? But I'm being safe, in like 731 would be like a little bit safer. Fuck you. Fuck QQQ. I'm done taking other niggas' moves. If it ain't my move, I ain't taking it.
Nah, I shouldn't have took his.
I be drawing the lines. I be fucking on it. Like I said, the only reason why I took that move, Chuck, is because I thought that was your move. Like, damn. I be on this shit. Oh shit, just touched the bottom Bollinger Band. Oh my god. Keep going, QQQ. Keep going. Oh my, bro. I really be calling this shit.
Yeah, I should have held that
If it
last put.
if it passes my lines and my levels, it's up, bro. And it did. I'd be listening to other people trying to like make some money over here, over there, and shit like that. Hook that. If it ain't coming directly from someone's mouth in the group, or it ain't coming from me, I ain't testing no more. I'm always gonna ask, is this your play from now on?
Damn, that recovery is low key. I don't know. We might see 730 today. That's 731, 286.
It went down to where I said it would. I told you it was gonna go down to 731. 30.
The Michael Weissel Network. Lowry. Yeah.
Yeah, that SoFi was a nice little tag. I should have bought more.
I didn't know. I was still playing it safe, man.
I should have bought more. I only bought one call on it earlier today too, and I sold out before you.
So if you look at the daily chart and go to a 5-minute candle, every single time it falls below VWAP, it skyrockets back up.
Ooh, you see that break on QQQ, dog?
Fuck yeah. I did not see it.
It retraced that fast though.
Damn, it retraced that fast. Holy shit.
I don't like that. That means buyers are in this bitch.
Yeah, but come on, sellers, bring it back down. I'll wait till this 5-minute candle closes. Because look, the sellers are here too. If it had to go down that fast, that means sellers are here too.
I hear you. I just don't like that recovery.
That was fast as fuck. That was fast. I ain't gonna lie to you. That shit was fast as fuck.
Nigga wasn't even
I
ready
didn't like that
for
either
it.
because I saw it. And as soon as I saw it, like you were like, "Look at that!" I looked, and then it instantly this shit started going up green. I was like, "God damn it!"
That was a big retrace. That wasn't even 60
Oh, shit.
seconds.
Hey, yo, this dude's right. Zach's right.
It was SoFi.
Ever since the market opened, as soon as that shit touches VWAP, it goes back up. Goes down, touches VWAP, goes back up. Goes down, touches VWAP, goes back up. Bro, what the fuck? Oh, you got me fucked up. Next week I'm going crazy. Tomorrow I'm going crazy on SoFi. If that pattern continues, nigga, I'm going to buy as soon as it touches VWAP. I'm buying. I'm going to go sell at the peak. Buy again, nigga.
I told you I know this nigga who just flushes that, wash and rinse and repeat. Rinse and repeat.
I'm about to do that same shit tomorrow, bro, because that is actually a good ass little pattern recognition, Zach.
And it's not only that, it does it more than once. Like if you go to a weekly chart,
Weekly? It's harder to look at the weekly, I ain't gonna lie.
yeah, it is.
Let me go to the 15-minute.
Bro, this shit is nah, don't do that.
Our association with the natural world is sadly almost always in one session. It's fucking.
Nah, bro, I don't think QQQ is going back up. Actually, it's dancing on one of my lines. Actually, I just noticed it.
It's trying to retest the 20-day moving
Yeah,
average.
it's retesting that 731.90-ish area. 731 to 732 area.
I'm so pissed that flush happened so fast, bro.
So fast, bro. So fast.
730 is what I wanted.
Nigga, it was there.
As soon as I looked and seen it was even
there.
going. Yeah, I don't like this anymore. I'm just gonna sell for a profit. I don't care if it's $5. All right, we back at break even. Where's Jordan's ass at?
Dealing with shit, I bet. Nah, bro. I don't. It's dancing on this line. I really don't think it's gonna break that line, Chuck.
That's already break or dropping. I'm on the 1 minute. It's already dropping below.
Okay, I was about to say, bro, I would not let go of that put. I'm not letting go of my shit. I did buy another one, I ain't gonna lie.
I just don't.
I was like, I'm done trading for the day.
I was
I
gonna
was
say
like,
I
fuck it,
was
I'll just
already
keep
down
buying.
200 on the day, dog. That's why I'm like, look, I ain't trying to take no more losses, nigga. Let's just give me $12 and I'll be back tomorrow. We like this. Look, I'm about to just set a sell order for 330, bro. Last time it dropped, it hit 323 at the highest. I was about to, you feel me? Yeah, bro. I don't like this. I like the dojis, but I don't like the fact that it's trying this 20-day moving average so hard. And again, that recovery, I don't like that. There's more green.
Interesting.
There's more green volume than red volume, but we already
It's
broke
not
the
breaking that.
triangle for the day, so on the 10-minute, we're forming a hammer down.
I think it's going down, bro.
I just don't have the patience today anymore. You feel me?
You feel me?
That's all it is. My patience is a little thin after fucking up this morning.
This nigga said, yo, Trump is being an idiot at the G7 summit, confusing the market. That's what George just said. We just said, where's George? This nigga just texted.
Bro, he been said that.
Oh, did he?
Yeah.
Oh, 12:52. Oh, I just saw it.
Yeah, bro, I might just sell. If it breaks above 260 again, I think I'm out, dog.
260? What are you talking about?
Right now, the contract is worth 250.
Oh, you're looking at the I'm not looking at the I'm looking at the chart.
Yeah, I'm watching the price. This is what I'm saying. As soon as I buy, I set a sell order, bro. Like I have it set to sell at 350 already. You feel me? And then I just open it and push edit, and then I watch it. So it's like while I'm watching
Boom.
it,
Told you, Chuck. Told you, buddy. It's not breaking that line. It has to flush down now. Has to flush. If not, if it doesn't, if for this candle, it doesn't pass 731.20 or even touch it, then I'm out. But if it hits that 37.120, bro, it's gonna flush down to 730.80.
okay,
Told you.
he's trying.
I told you.
Okay,
Come on, baby. This is my baby.
It's
This is my baby. I know what this shit's doing.
731, 240. 731,
Like I said,
380.
this
See?
candle, it has to flush down to the 731.20 area. If it breaks 731.20, it's dropping down to 730.80, guaranteed.
Let's go back to 730.
And it's gonna break. It has to break down that 730 level. But yeah, bro, I'm telling you, if it gets down to the 731.20, then it's definitely going to 730.80. It's just pattern. So it's a pattern that QQQ does. It's gonna have to blow past that 730 though. That's 730.99. Go to 730.80. I apologize. If it blows past the 731.20, it'll go down to 730.80. If it blows past that, then it'll go down to 730.20.
It's fighting to stay above the 731.
Yeah, it's trying to stay above 731.20. If it breaks 730, 120 is good, but if it said it might go back up to 730. So you could sell for profit right now. I'm 13% up.
I think I'm like $5 up.
I don't look at that. I look at the percentage.
358.
See, told you. It has to hold that. It's going to retest it again. It's going to come back down and retest it, but come on, baby. Flush, 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 flush. Give us one little fleshy flush and then retest at like 729. That'd be so nice. Hey, yo, Zach, are you still on?
Yeah, I'm still here.
Motherfucker, this bitch it reached up to the peak and look, SoFi going right back down. If this shit touches VWAP, bro, I'm making hella money tomorrow because I'm doing this constantly tomorrow. If this shit goes all the way back down and touches VWAP and then goes back up again, I'm really gonna freak the fuck out.
Yeah, that's what I'm watching right now.
Yeah, me too. Like that'd be a beautiful fucking. Oh, look. You might as well sell out of that put, Chuck. If it stays green, this candle, I'm selling out of my put. $2 minutes. Come on, sellers, get your asses in there and sell.
All right, I gotta hop off. I gotta go get my kids from the sitter's house.
No, you're good, man.
So I'll probably be back on around the Fed announcement.
All right, bet. That sounds perfect.
All right, see you guys.
It has to close below the 731, 732 level. If it closes under the 732 level, I still think we might be good. But if it closes over that, then
Back to break even. Almost. No. You see that?
yeah,
No.
sell out, bro. It's creating a W. Protect the capital. Damn.
Bro, I'm down 275 on the day, dog.
I'm down 128.
I'm out this bitch.
All right.
me to quickly summarize what we're seeing with the stock of the year. Elon Musk led SpaceX this morning. The stock is skyrocketing. The stock is soaring. The stock is now officially into orbit. The stock is gaining more altitude. There's no sign of the stock coming back down to Earth, at least for now. I can honestly do this all damn day, and I just might take this act over on X after the show. However you want to say it, though, what we are witnessing with SpaceX 3 days into its public life is outright impressive. The combined market cap of SpaceX and Tesla puts it in line with Apple's market cap. SpaceX's market cap has it in line with the highly profitable Microsoft at $2.9 trillion or so. And get this one, on a net basis, retail investors have now bought almost as much SpaceX stock over the last 2 sessions as they bought across the entire U.S. stock market last week, says Vander Research. As an added layer of fun on top of the SpaceX story right now, the company has formally agreed to take over Cursor in a deal that values the AI coding startup at $60 billion. It's $60 billion. This deal cements a key part of Elon Musk's efforts to catch up with rivals on coding tools. Lots to talk about with all things SpaceX here on the OB Roundtable. Tim Urbanowitz, innovator from Goldman Sachs Asset Management, Chief Investment Strategist, alongside our very own Brooke DePalma and Nez Ferrer. Lots going on there. I'm just so jumbled takes. I'm so excited about all things SpaceX, guys. Tim, good to see you. What do you think about this rally, dude?
Well, Brian, there's clearly an appetite to take risk in this market. I think there was before. I think if we look at the deal that has been signed here between the U.S. and Iran, or about to be signed here between the U.S. and Iran, I think that's just increasing the appetite to take risk in this market. And look, the backdrop is very, very strong. We had a very strong backdrop heading into the year. All the fiscal tailwinds. We took a little bit of a hit to that when we had this big inflation spike from the war. And when those headwinds start to subside, we think the runway is very long, not just for the tech trade, but really broadening out. So risk appetite is strong. We think that's going to continue for some time here.
Is this, Tim, just a SpaceX story? People just, they may have missed out on Friday. They were watching this thing from the sidelines on Monday, coming Tuesday, like, you know what? Guys, Elon's going to take this thing to the moon. Either I get in now or I'm going to miss a couple hundred points in this.
Well, Brian, risk appetite is strong and FOMO is definitely strong in this market as well. It has been for some time. And just anytime you see big gains like we've seen recently in the market broadly or in specific names, investors want to get in. And I think, the strong piece about this, too, if you take a step back and you look at tech as a whole here, we've had a good run this year, but we've actually seen valuations compress about 16% from where they were to start the year. Reason being, Brian, earnings are incredibly, incredibly strong. And so that's really important. At the end of the day, when we look at what's going to drive stock prices long term, it comes down to that earnings growth, and that earnings growth piece is there right now. So that's incredibly important. We think it's a strong case over the next year for U.S. equities. So a lot to like right now, Brian.
Brooke, my X feed erupted last night. So many people watching the SpaceX IPO. Last night, it crossed the $3 trillion market cap for the first time. That was last night. Now, some of these gains begin back this morning. Afternoon's hit on that $60 billion Cursor deal. Not sure investors really wanted to see that. I think some thought that Elon wanted to buy this company or intended to buy this company. What are you seeing out there, Brooke?
Brian, what we're seeing is this incredible run-up in day 2, its second full day of trading. Brian, for those of our viewers who are just tuning in, you already said intro, you called this the stock of the year. That definitely caught my attention. When you size up SpaceX and where it is now with its valuation, with that market cap, is actually slightly above Amazon. And that speaks volumes to the appetite for this company. And also what we've seen is just the entrance to market being done in such a Elon Musk type of way, really giving way for retail investors to get in on this. And what we heard was that that green shoe option that Elon Musk even joked about, all the underwriters, green Nike shoes, it looked like, for the IPO day, they actually were able to sell an additional, I believe it was 83 million shares, and that ends up raising a total of $86 billion, above the $75 billion that we had expected SpaceX to raise on its IPO day. And so clearly, I still saying the appetite for this type of investment is definitely there. And we're already seeing it in the second full day of trading, have valuing where to tech giants have been public for years, Brian.
Look, yeah, the Anthropic IPOs, when and if they happen this fall, they're cute. But this is the stock of the year. SpaceX, It's hard to argue one thing like that. I'm calling it right now. And as a question too, I'm still seeing a lot of X, and this is being recycled from about a day and a half ago. Investor Bob Dower, early investor in SpaceX. I mean, calling out a potential $50 trillion valuation on SpaceX. So the insanity just keeps getting more.
It is the stock that everyone is talking about. And as you mentioned, also retail investors buying up this stock in droves. And also looking at the entire now complex of AI. And as you had put it, I think the Fab 10, correct, Saz?
Yeah, I'm taking credit for that, actually.
You are taking credit for that.
Mark this down.
Yeah, I know. It is yours. And I think there's something to that, because if you take a look at what investors are buying into, they're really buying into the Elon Musk conglomerate of companies that are all now surrounding this AI space, the AI complex. And as what Burke was mentioning, this valuation surpassing Amazon, approaching Microsoft, now purchasing Cursor, this using AI to automate coding, getting into the enterprise. I mean, this is the entire complex that now all these investors are buying into, and it is huge. And if you imagine that they may also merge with Tesla at some point, I mean, that's mind-blowing.
It is mind-blowing.
Yeah, I mean, then you're going to have Optimus, you're going to have the robots, everything included in this. So really, what investors are buying into is the Elon Musk vision. I mean, this is the Elon Musk vision of an everything company that has to do with AI, space, and everything else.
And if it wasn't clear from what Inez was saying, I claim the Fab 10, Brian Sozzi, on this date here. Very important. So when you give credit out there, Tim, come back to you, because we've seen a different variation through the years. We've seen FANG, created actually by my dear friend Jim Cramer, I believe about a decade ago. Now we've seen the Mag 7 has dominated the trade in the markets the past few years. Now we have this thing that I'm calling the Fab 10. But on the Mag 7, is that still a relevant investing acronym to invest upon?
Well, Brian, we'll have to talk to our product team. Getting an ETF on your index there.
Congrats on that coin there. Very simple. It's SOZ. It's SOZ.
Oh, there we go.
I'm here all day.
I love that. Well, Brian, it's still relevant. I mean, those are fantastic companies, but if you look at the performance this year, Mag 7 is pretty much flat. And, we talked about this rotation trade on your show for a long time now. We're seeing other parts of this market that are really starting to outshine. You look at the S&P 500 equal weight index, strong outperformance there versus Mag 7. Small caps doing really well. And one part of the market right now, too, when we look at the tech trade, and specifically AI infrastructure, we favor outside the U.S. We favor emerging markets there for the main reason that valuations really haven't caught up. You have South Korea and Taiwan that are just juggernauts in the infrastructure space. We think that's going to be an area where investors can still capitalize on outsized gains. And not saying that we don't like the Mag 7 in the U.S., but in the U.S. we think better opportunities for bigger gains are in pockets of the market of this rotation trade. So it's still relevant. There's still fantastic companies, but when we're looking for where are the best and most obvious opportunities right now, emerging markets, and then within the U.S., it's that rotation trade.
Tim, you're the expert here. My friend Dan Ives, he has his own ETF. It's ticker symbol IVES. Why can't I have my own ETF called SOZ? Like, I've interviewed freaking heads of state and billionaires. Why can't I have one?
Well, we'll have to talk after the show. I mean, I think it sounds like a great idea, and obviously with your face behind it, there's no reason it can't do well.
Guys, no, the team's in the back. Listen, please. I mean, as always, make sure Tim's on. Maybe we'll have Tim on for the rest of the week. I mean, this guy's killing it. The other side of this trade, too, is SpaceX is going up at the same time as tensions are cooling a little bit on Iran. Inez, what are you seeing in the oil markets here?
Yeah, look, oil has been declining, and the expectation is that the Strait of Hormuz, if this deal gets signed, goes through, then the Strait of Hormuz could start reopening by the end of this week. And Goldman Sachs is now saying that they are assuming that by the end of July, you would have oil flowing back again, resuming normally. And so what this means is that you will see oil coming down even further. You've got Goldman that is now dropping their Q4 forecast for Brent to $80 a barrel. You've got WTI that's also being dropped to $75 a barrel. So this rally that we've been seeing, the SpaceX enthusiasm, the rally that we've been seeing in semis. Remember, the AI trade is back up now. The semiconductor stocks have been up again to all-time highs. Micron, SanDisk, Western Digital. If you take a look at this entire rally, it's not happening in a vacuum. It is happening with this tailwind of, okay, we may now see that oil comes down meaningfully, and the Fed may see this energy shock as temporary, perhaps.
Brooke, this is a big tailwind for the consumer.
This is a big tailwind for the consumer. When you think about just how much money they've been quite literally pumping into their, gas tanks over these past 3 months, that really weighed on consumer sentiment, which we saw slightly improve on Friday morning. Largely, it wasn't really a headline because SpaceX took over the conversation. But we actually are at this pivotal moment right now where we continue to see inflation surpass wage growth. And that's been something that we've been watching and keeping a close eye now because it's been consecutively happening over the past few months. And that's sort of eating into low and middle income consumers, according to Bank of America's ability, these low and middle income consumers' ability to spend, whereas high income earners continue to be able to spend because their wage growth isn't necessarily, coming in less than what we're seeing on inflation right now. And so this is something definitely to watch. We want to be able to see the consumer who, when you think about how much the consumer contributes, is over half to the U.S. economy. And so this is really crucial, especially heading into these deal days. We have Amazon Prime Day coming up shortly. And also we expect other retailers like Walmart and Target to also have their own sort of deal days. So this is really pivotal in order for these days, for these mega companies to be successful. The consumer needs to feel like they have extra room in their wallet to be able to spend right now.
Tim, last word to you here. What would prevent the market from going up another 10, 15% into year? And I know that might sound aggressive, but we have now this tailwind with Iran, oil prices coming down, better backdrop for the consumer. We got a company like SpaceX coming out very, very strong. OpenAI, Anthropic out there. New Fed chief may not be doing anything on rates, and that's okay out of the gate. Like, I don't see any roadblocks right now.
Well, there's certainly a clearer path than we had, just a week ago, too. I think you still need to just approach the Iran deal with caution. It's not signed yet. I mean, you hope the ceasefire lasts, but I just don't think you can take that as a given right now. And for market, inflation and higher interest rates can be a problem. And, we talked about this last time I was on the show, Brian, but when we have the 10-year Treasury that breaks that 4.5% mark, equities start becoming very sensitive to moves higher in interest rates. So we want to be cautious of that. We don't want to just assume that inflation is coming down. Look, I think just given the starting point heading into the conflict, I do think the stocks have a very clear backdrop to do well, but we don't want to take that as a given. I think you still have to prioritize risk management in your portfolio. We don't want to just think it's all green shoots out there. But certainly we are optimistic, and I think there's good reason to be.
All right, big thanks to Tim, Brooke, and Inez. Appreciate the insight. Let me know about that ETF, Tim. All right, here comes the next wave of AI-related layoffs. More on this one next.
Before NetSuite,
Corporate America is all in on AI, spending hundreds of billions of dollars deploying it across every corner of their businesses and telling investors the productivity gains are real. But a brand new Just Capital survey throws cold water on the victory lap. Workers are skeptical, customers are less satisfied, and the share of corporate leaders privately expecting large-scale job losses has nearly doubled in just 1 quarter. Martin Whitaker is the CEO of Just Capital and joins me now. Good to see you again. I appreciate it. Where's the disconnect here? Because if you talk to a lot of CEOs, like I'm sure you do, they will say AI is driving a lot of productivity and we're going to need more workers. Well, then what's going on with these layoffs?
Well, I wonder what they're saying in private, first of all.
Yeah.
But I think, look, we've been surveying now, going back to the fall when I came on, that was the last time we talked. We're surveying investors, business leaders, and the public. And we've seen now changes over the time from October through to now, and we've also seen how those views kind of vary between those three groups. The public, interestingly, are getting more optimistic about AI's impact on the economy, what it means for them, for their productivity, their job satisfaction. So that's kind of interesting. At the same time, investors are getting more pessimistic about impacts on social stability, job losses, things like that. But what's really interesting to me is the business leader views. We've seen more companies now, more business leaders say, we're going to have to invest more in displaced workers. That's the number you just cited there. So that almost doubled. It's still a low base, but it's increasing. And a lot more business leaders also saying we're going to have to invest more in our workforce and supporting those who are displaced. Things like contributing to a displacement fund or outplacement services and things like that.
So universal basic income. I've heard it called a couple different things.
Well, there's different forms for that, but it's basically, I know I'm going to have to let people go, and I'm going to try and help them and soften the blow and maybe help them get another job somewhere else.
What role does government play in this?
Well, we've asked that question as well of all three.
You can't just be all on companies to be handing out checks to employees that they can't.
Well, that might not be as crazy as it sounds. A lot of CEOs we talk to are thinking along those lines. Like, how do we invest in people, even though they may not be part of our company for the long term? Interestingly, this idea of social stability, like minimizing the impact of AI throughout the transition on society, is in everyone's best interest. Public, business leaders, investors all say that's the number one issue. So I think there's sort of a broader sense of like what's in my best interest as a business, and maybe training people who might not be part of the company is part of that. You asked about government. I mean, we've asked, we're polling now on taxes. Should there be a tax on AI?
Should there be?
Well, we'll find out in the results. I'm happy to come back and talk about that.
Definitely.
Should companies contribute to a general fund for worker displacement, which could be then meted out as UBI or something like that? So I guess the point is, I think there's going to be, throughout this transition, a lot of creative approaches that need to be brought to the table to help all of these kind of capital markets players manage that.
What would a tax on AI even look like? So it is, let's say, the Mag 7, we're going to add this tax to your
token usage.
Oh, wow. That could be, that's significant.
Well, if you're replacing humans with AI, instead of taxing the humans now, you got to tax the AI. So you're taxing a unit of output, essentially. And so I'm not saying that's going to happen. I'm not saying that that's what we've found in the polling, but I've seen that reported, and I've seen other local sort of taxation issues around data centers. That's another interesting area where we've seen the backlash, right? We're seeing that right now in Texas.
Nobody wants these in their backyard. They don't want to.
Well, some do.
Energy bills, some want them.
I think it's a difference of opinion. I actually think what's going to happen is we're going to see an attenuation of different perspectives. I want this data center because I want a good job, and this is going to give me and my family, a way to provide for the future. Other people will be vehemently opposed. And business and probably local governments, maybe the federal government's going to have to work harder to sort of convince society and build trust. A lot of this is going to come down to who do I trust, and is this working for me? And what we've heard really throughout our polling is people are not opposed to AI. They just want to benefit themselves. They don't want a handout. They want to participate in the upside.
I was thinking coming into this, there's no one better person, I think, to answer this one. There's a lot of focus on Elon Musk's net worth. Now, you wrote a post on your LinkedIn, I think it was like June 12th, kind of like sharing some thoughts. Is it okay to have one person with that much wealth? And then what is the responsibility of him on doing better for society?
So we did ask that question. Are you comfortable with there being $1 trillion man, $1 trillion person?
And it's like 1.3 trillion. But anyway, we're just splitting numbers here.
Fair enough. The answer was mostly we're okay with that, provided that money was not made through exploitative means or that other people are not paying the price for that. So I'm okay with somebody, and we've seen this throughout our polling over the years, Brian. I'm okay with companies making a lot of money, CEOs making a lot of money, provided that I'm given an opportunity to also participate in that upside. So I think that's an interesting alignment, and I think more Americans believe in capitalism. We've seen that in our polling. They just want it to work better for them. So yeah, go for it, Elon. Just make sure that some of that wealth is also creating wealth for others, and take note. I would say other tech, and other folks in that space, like how you make your money matters.
Well, it doesn't. I mean, he's making rockets. So I guess to your point, like he is literally trying to save the world. I mean, no pun there. I mean, that's what he's trying to do. I mean, so that's society is accepting of him being worth 1.3 trillion.
Yeah, and Tesla's environmental impact, was a major kind of motivator, behind that company. So I sort of feel as though in that case, yes, but the deeper principle here is how companies make their money, how individuals create opportunity for others. That's how you get your social license to do business. And I think as we go through the AI transition, if it gets rocky, that is going to be where investors and the public are going to look, who can I trust here and who's earned my trust? And who do I really think is going to allow me to participate the best way possible?
Good seeing you, my friend. I always
Thank you, Brian.
love these surveys. Very, very insightful. I appreciate it. All right, date save for you. I'm about to drop another big episode of my Power Players podcast on Thursday morning, and I don't use the word big lightly here. I go one-on-one with Binance founder Changpeng Zhao, better known in crypto circles as CZ. We talk about his time in jail and what he thinks about the latest crypto winter. You can catch the episode on Yahoo Finance, our app, YouTube, Samsung TV, or Roku, or listen in on Spotify, Apple Music, and Amazon Music. Julie Hyman has you next on Market Catalyst.
First of all, we're starting things a little bit differently today, taking a live look at the NASDAQ, which is giving a special shout out to our new platform, AlphaSpace. You see it there up on the big screen at the NASDAQ. What is AlphaSpace, you might ask? Well, it's our new platform and lots of different tools that people can use within AlphaSpace in order to track your portfolios and to track your markets. And so that is a new way for people to use all of the great data and charts that are within Yahoo Finance. I've got it up on my screen right now, and what I've done is built basically the components of the S&P 500. So this is a heat map looking at the sectors that are on the move today as we see the market on the rise. So these are some of the groups that are on the move in today's session here. So a lot of it sort of cyclically led, again, some of the tech outperformers that we're seeing, and consumer discretionary. So we continue to watch what's going on here. Although it occurs to me, I should probably refresh this and make sure that it is all up to date. There we go. That's today's action. That was yesterday's action. So it's S&P 500, little changed in today's session, but we are seeing industrials up quite a bit today. Let's talk more about what's going on in the markets here. A lot to consider, from the maybe finally end of the conflict in Iran to the Fed meeting, which we're going to get the first press conference from Kevin Warsh tomorrow. Joining us to talk about all of that, Rick Rieder, BlackRock's Chief Investment Officer of Global Fixed Income, where he oversees $3.3 trillion in assets. Rick is also the head of the BlackRock Global Allocation Team. He wears some other hats too. He wears a lot of hats. You don't sleep a lot. We've talked about this before.
I for some reason I'm not really a believer in it. And
I'm not a believer in sleep. Okay.
I've always said it's a waste of time. There's like a lot to do in life, and but yeah, no. There's, and by the way, there's so much going on in markets, and there's so many interesting things to do. I'm sure, by the way, it's part of why in the last few weeks I'm sleeping less. Like this is the most exciting time.
It is.
And, not always good.
Right. Right.
But it is. It's generally been a pretty good market, and just the dynamics of what's happening are super interesting.
I'll take the other side of the sleep trade, by the way. I'm a big proponent, but we'll get into that another time. Okay, so what's the most exciting to you from a positive perspective right now then?
Listen, I've been doing this for a really long time. I've never seen a greater confluence of things that are happening. Technology, financing technology, both debt and equity in massive size. And obviously everybody talked about SpaceX and Google the week before and others that are coming down the road. And then on the debt side, almost every day we're seeing debt issuance.
yeah.
So, I've never seen anything like this. And then on the flip side of it is, for 2 decades before COVID, you had negative interest rates or 0 interest rates. You can build portfolios. We run this ETF called Bink, and we're running 6.5% yield. And it's low single A rated. The idea that, wow, you can create 6.5 and then you can take advantage of the equity market. It's a pretty good
Okay,
time.
so as you talk about all of these different ways to wring return out of this market, would it be too far to say it's shooting fish in a barrel right now? Is it just that there is this surplus of opportunity, do you think?
I always, people say in retrospect, I always hear this, well, the easy money's been made. Right. I never think there's any, honestly, I think it is always hard. And it's always hard because, where do you want, even when markets are trending higher, where do you go to optimize it? How are you managing risk? Whenever you take advantage of good markets, you always have to manage the left tail. You think about the war and you think about the risk that's out there. So you always have to manage to that. Today, what I think is super interesting is the markets are moving with earnings. So while the technicals are pretty profound, if you actually look at multiple, particularly in the equity market, you look where these multiples are, in fact, multiples are compressing in many ways because the earnings are so fast.
Yes.
So the earnings are so strong. So, one of the things I love about markets, by the way, not always, is when they're doing what they're supposed to do. And today, it is very much correlated. Whoever's driving the growth, who's ever driving the earnings, as long as you can try and use all your data, your analytics, your AI today, and try and come up with what do we think the T+1 earnings are going to be, then it's a good environment to invest around.
So what do you think is this was falling. What do you think is the best opportunity right now that maybe is not as well appreciated?
So, I hate to be consensus around, I still like tech. I think for the years that we've talked, I still think in equities, when you're at the bottom of the stack, you want to invest alongside growth, and we're seeing explosive growth. So I still like that. We're starting to move a bit of money into financials. And, quite frankly, you think about some of the beneficiaries of all this activity and the interest rate dynamic that you can generate real return off. The financials are interesting, and so we've moved some money there on the equity side. On the bond side, it is very much, some of the high quality areas, investment grade credit, not that interesting. A lot of supply, spreads are tight. Agency mortgages, okay, spreads are tight. High yield, there's still opportunity in high yield. The yields are great. Europe is outstanding because of you get a currency swap, and then the yields are terrific for Europe in what is a slowing economy, which is nirvana for fixed income. And then, EM has been you don't talk a lot about EM, but you just put it in the portfolio and it carries really well. And as long as you believe the dollar stays contained, which I think will be the case, EM has been pretty good on the fixed income side.
I'm curious what you make of, especially when we're talking about technology recently, the debate has switched from tight supply to growing supply. And I'm talking about the supply of shares themselves and of debt for that matter as well. We have seen obviously big IPOs coming to the market. One came, more are coming. We're seeing big companies issue a lot more shares in a way that they weren't doing. NVIDIA doing its big bond sale. So both on the equity and credit side, there's more issuance.
Yeah.
What are the implications of that?
So, so there's one thing that's been in the market that I don't think people have really factored in as much as they should. The amount of cash that is out there. I looked today, money market funds, there's $11.25 trillion in money market funds. In fact, I didn't think the number was that high, but it's $11.25 trillion. Plus, you've had this period for a number of years that the buybacks grossly exceeded the IPO calendar.
Yes.
Even today, even with all this issuance, you still have buybacks that dwarf. So in equities, there's just not enough supply. And so I think you're fulfilling some of the opportunity in terms of what people are looking for in terms of putting cash to work. I get I put 20% of my salary into equities, for example. Gosh, now I'm getting some opportunity to take advantage of that. So I think that is a big driver of what is soaking up some of that, a lot of that supply that's coming to market. So I still think the technicals are pretty darn good. And you know, even with this immense amount of supply that's coming, you know, I would say on the debt side, some of the investment grade, you know, credit that's coming is okay. But you know, some of the data center finance has been really interesting. Some have come in converts form, where you actually get to buy upside at a pretty cheap price and get paid a coupon for it. So there's been some stuff to do around that. That's been pretty exciting.
I want to come back to the money market question for a second, because I saw you quoted in my alma mater speaking about this,
Yes,
Bloomberg that is,
I've heard.
talking about this. And I too like did a double take at that number, and then I went and looked it up and saw the chart that's up and to the right of the money market funds. You and I have been doing this a long time. People always say there's cash on the sidelines, right? It's sort of one of those old saws in the market. The question is, if there is cash out there, what convinces it to come in? And so I guess the question is, what's that catalyst now? Because obviously, there's been no lack of participation in the market. There's been a lot of people. You know, we've seen the what stocks have done this year. So what is the thing that is going to get them in?
Two things. One, listen, people are always wary about when you have a big geopolitical dynamic. And if we're on the back, even if it's going to be messy, even if we're going to go through some headlines, it's clear the momentum is towards some broad solve. That's given people comfort. The second is these earnings numbers are, I mean, almost staggering. And so, you know, when you look at some of these big semi companies and you say, my God, these stocks, you know, have tripled and whatnot, and then you look at it, and then you look at their earnings. And you say, wow. And, you know, we did something yesterday. You can even sell put options, and the volatility you're getting paid. You know, we did something yesterday. We sold calls and puts. The volatility what people are paying is immense. And so we were looking at selling puts yesterday, and I thought, if for whatever reason, you know, the market traded down, we'd be creating these companies at literally low single-digit multiples. That's pretty exciting. So the point being, like, these earnings are supporting, you know, where these things are going, and so it's giving people a lot of comfort. Plus, you know, the aspirational dynamics around some of these new businesses, without saying individual names, that have been very exciting recently. Like, gosh, you look at the total available market size of some of these, and you think about, you use your imagination a bit, you know, pretty scalable.
I want to ask you about the Federal Reserve, because we are about to get a rate decision, which will probably be no rate decision, but it'll obviously be Kevin Warsh's first meeting. Is the Fed going to raise rates, not tomorrow, but this year? And, you know, what is that going to look like, if you think so?
So, listen, I think you have to factor that into the equation, that you've got a committee that is pretty hawkish. I personally don't think they should raise rates. In fact, I think they got to move towards lowering them, because when you look at the data, including so housing starts today, the areas that are the interest rate effects, I mean, the housing number was really weak, the housing starts number. Housing, you look at inflation, and you look at the used car data, I don't think they should be hiking rates. In fact, I think they should be cutting them over time. It's hard to do that today. I don't think they're going to hike. And we think, now that you're getting to the other side of a fiscal tailwind, we think the economy, you're going to see some moderation. Not recession, I think close to that, but some moderation, some more pressure on unemployment, and inflation, we think by the end of the year is going to moderate somewhat. So I don't think they're going to hike. I think you got to build into your calculus, you know, that they're going to have to talk in a way that is going to try to restrain inflation.
A hawkish hold is what some are
I
talking
think so.
about,
By the way, I think it's going to be the most interesting press conference. I've got to travel to Europe tonight, but I'm going to be tuned in. I think it's going to be the most interesting press conference in a very long time. Just to lay out what are the metrics he's thinking about, how is he going to change forward guidance, which I think he's going to pull back on a lot. What's his communication strategy going to be? How's he going to use a balance sheet? I think this is going to be fascinating. It's going to be good TV.
If you, for example, had that job, what would be your priorities if you were standing up there tomorrow?
I mean, so listen, I think you have to be protective of people not thinking you're too relaxed around inflation. When you have, obviously, the headwind from fuel and trade and you know, the backside of tariffs, et cetera. Listen, I think, one man's opinion, I think it's a really big deal that if you take most of the people
smaller.
Yep.
But what you're suggesting would be in line with that if
could
you're
still
just
do it.
letting stuff run off.
You could still do it. Listen, I think he's going to be very articulate in how he describes it. But, when I say articulate, I also think he's going to be more open-ended than we're used to, which I think is a good thing. Like, I don't think we need...
Meaning what? Like less
don't
conclusive
need-
about this is how we're thinking about X, Y, and Z.
So, no, well, I mean, I think we've been through this period for a number of years of increased communication, and I have a strong view. When you're easing, you don't have to communicate that much. In fact, you want to sort of jolt the economy because you want to instigate animal spirits, you want to instigate financial velocity. So you don't need to tell the world we're going to move 25 every 6 weeks or so. I just don't think you need to do that. I think you want to, the art of surprise can be really powerful. And I think, constantly communicating and saying we're going to move 25 or not move 25, I don't really think you need to do that. And I think as long as he establishes, here's the metrics we're looking at, so that markets can interpret, okay, I understand what you're looking at in terms of the foundation of how you're going to set rates or use a balance sheet or liquidity, et cetera. And then once we see the data, okay, now I can interpret what that means. As long as you're articulate about your metrics, you don't have to go back and forth on and have a lot of communication and the dot plot, et cetera. I think you can do a great job without it.
In this era of sort of like rolling supply shocks that we've had post-pandemic, because they've just sort of piled up, right? Energy is just the latest. Chips are, by the way, are a supply shock too. Is the Federal Reserve less important in terms of the economy?
Yes, I mean,
are we still are we like, sort of obsessed with it, obsessed with a previous era?
Yes.
Have we not updated our thinking?
I mean, to me, it's exactly the right point. If you go back to the 90s, I'm doing this presentation on Thursday. If you go back to the 90s and you look at the big companies that were spending on CapEx, that move in the interest rate was critical for them. Hard asset manufacturing. Today, it's a service economy. Not that the interest rate tool, not that relevant. The interest rate tool is quite relevant to small business. But what's driving CapEx in the country today is big. And part of what I'm describing, if you look at the margins of those companies, you look at their net interest margin, you look at their net income margin, their cash flow margins, a small move in interest rates is not going to affect CapEx. So yes, I don't think that tool, I actually think, and I think what Chair Warsh will say, if not tomorrow, in the future, is actually what creates inflation when you have too much liquidity in the system and the monetary base is expanded. And so can you be thoughtful about maybe restrict the monetary base a bit, and that will start to draw down the inflation dynamic. But using the interest rate tool, to say it's blunt is an understatement.
Yeah. I'm also curious to get your take on something else that he's talked about, which is the deflationary, disinflationary, at the very least, impetus of AI, right, because of its effect on productivity. Right now, it feels inflationary, right? Electricity, chips, as I mentioned, even labor to some extent. Those who are building when does that flip over?
So sick, dog. Everything that I bought earlier just went up. And the only reason I'm sick is because I knew it was going to. I guess I can't complain too much. I just went from down almost 300 to just being down on the one bad play that I took. I'm just salty as fuck, bro. The QQQ puts me and Deshae had went to over $1,000, bro. We had 3. One went to 779. The other went to 913. And the other went to 239, bro. And so I sold all 3 of them for losses. Actually, no. I sold 2 of them for losses. And then just now I bought one of them and made a profit. And then, bruh, I bought an SPX contract. Man, I bought it and sold it within the same 2 minutes. If I would have waited 3 minutes, bruh, that shit would have went $1,700. Not even it would have, it did. I just sold out too quick. But it's also because that announcement just happened, you feel me? So I just put some money back in the last like 5 minutes just so I didn't end on a $300 down day. I can't do that, bro. Instead of being down like 50%, I'm down 8%. I could do an 8% loss on the day. And I bet you tomorrow is going to be flat. All right, let's see if this pattern works with SoFi. But see, just like that, bro. QQQ went to 724. It's back to 730 already, bro. 1, 2, 3, 4, 5, 6, 7, 10 minutes. A 10-minute recovery. That's crazy. The same put that I just was able to sell for $600 is at $300 again already. And that's the other reason why I'm not mad at the fact I sold just now. I'm just mad at the fact that I took that Tesla put. I should have never did that. There was a rate cut?
No, there wasn't a rate cut.
Everything stayed the same?
Everything stayed the same.
Since the SPX took this big ass drop just now, I guess what time is it? 11, 12, 1, 2, 3, 4 hours, or I guess 2 hours left. And the next 2 hours, I think SPX goes back to 7,500. QQQ has already made a nice recovery back to 730. If anything, it goes back to that 734 level, stalls out. Apple, I think Apple might be done for today. It's just going to bounce within this range, probably 50 cent. I don't know too much like how SoFi is going to respond to news type shit. It's like the news isn't specific to SoFi. So I think SoFi is just going to consolidate back into the ranges we already said. It's like, if anything, it might start breaking out more towards that $19 call before it sinks back down to 16 or 17. The only like relativity I can think of with SoFi is the fact that it's a bank technically, and the fact that it's technology. So if anything, with the fact that the rates stayed the same, banks are going to stay about the same. You feel me? So it might continue up because it'll like the news because it's not negative.
Yeah, I mean, it dropped right after they broke the news, but then it looks like it kind of hit around what level is this right here? Give me 1 second.
And that's because everything dropped as soon as they announced the news.
1822, and then it's back up to 1845 now.
Yeah. And so that's why I'm saying I think it's just going to consolidate for the next couple of hours.
Yeah. Well, I got a call in for 19 for next week, and I bought in at 1840.
The price of the contract matters more than the buy-in price for me.
Priced it, so I paid 90, and it's up 4% right now.
You just bought one?
I bought two.
Two? All right, so you paid 45 cents a piece.
Yeah.
Yeah, no, I like those odds. And that's a 26. Yeah, if you go up more than 20%, I'd sell. Like 20, 25%, I'd sell, wait for tomorrow and reposition for a swing. If not, I just would hold on. Oh yeah, the open interest on that is 12,000. It has a 27% chance of coming through. Yeah, you're sitting in a decent spot with that. It's just crazy as fuck that contract went from 330 to 1700 in the same 4 minutes, bro.
Yeah, that is crazy.
I wish I wouldn't have been so down on the day. I knew I should have just waited until 11 o'clock. I don't know what the fuck was wrong with me. I knew I should have just waited. I'm not tripping too much, but it's just annoying. It's like, why lose money when you could have did nothing but made it?
Right.
And mainly just because I was right. You feel me? If there was instances where all of these was wrong, I'd be like, damn, I just suck at trading. I know I don't suck at trading. I just trade too early. I need to just do everything I'm telling you to do.
There you go.
Fuck what I know. Just do what I'm telling people to do to be safe. Is I took all the safety wheels and buffers and training wheels off for myself.
First get tickets. Listen. This destination. Okay. Okay, I will.
All right, I'm gonna hop off. I gotta go get the kids a snack. So I'll probably be back on before close.
now 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Thank you so much. Colby Swift from the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including a strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market. But broadly, I would say there, Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
You've said you don't like forward guidance. You dropped it from the statement this time. But with the dot plot, 9 members suggested that they want a rate increase by the end of the year. And the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly, through using the likes of you. I had a great old mentor named George Shultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Chris Rugaber.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trim to mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered the discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Thanks a lot, Claire Jones, Financial Times. Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Hi there, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job, so I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first order consequences to what we're doing. But we do have a really important job there, and it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job, that's our commitment, that's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the President since you're swearing in?
So on the President, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Bessent to this point have helped widen that aperture
So we're aware of things that could affect our day job, even if it isn't.
Steve Leisman, CNBC. Mr. Chair, thank you, Mr. Chairman. Thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. And the best way I can describe it is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on the price stability front.
Nick.
Thank you. Nick Timmeros with the Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank in an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just describe it this way. There's a race between supply and demand.
Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Andrew.
Thanks, Mr. Chairman. It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this we come up with recommendations, which Fed staff have already begun to develop, about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI, so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions, decisions that we'd say are real contemporaneous data, not data that we call contemporaneous.
Okay, but what does it mean?
Thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the Inspector General, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. I'll be interested in reading the report. From my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and to make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised to get to the full breadth of the Fed's tasks in the weeks ahead.
Victoria.
Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SEP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around what would the expectations for inflation being higher and also potentially growth being slower?
So my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks. I think we're going to know more then, and I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework, there were some changes to the SEP.
Because he's literally
That's a committee discussion, a robust discussion. I think we'll have
yes
it.
or no, but
I
we know
believe
that
we're
what
going
we
to
say
come
is going to drive
to
the
a
market.
better
So
mix
we'd
of
rather look at the
communications
real-time
to
data and see what's happening in real time.
So it's like
deliver on
follow
what
the
we
market,
promised.
because we're not
But I wouldn't want to
following any
prejudge what those
trajectory
are.
that
But
we've
between
known
now
for
and
the
then, I
last
would
30 to
continue
50
to expect
years.
colleagues
What
to
you guys
submit their
expect to happen at
SEPs.
times like this,
Some of them
said, I want to look at the real-time data, and we have
believe that the practice is currently structured is okay, but I heard a lot of interest in real
That means
reform,
everything that we
generally
used to
about
know
all these
is out
topics.
the window. So
You
that's
didn't
the
ask
one
it,
thing
but I'll
personally.
answer.
He said they
It
want to
was
stabilize
a pretty
prices, but
gracious
they're not
couple of days,
drawing a
and
plan
it's
to
been a
do
pretty
it. But they don't like the way the market is going either.
warm few
So
weeks.
they're going to
The
find a way to make the
institution wants
market
to
level out,
figure out how
regardless
we
of
can
what
do
the world
better.
is doing.
The
Pretty much
institution's
what I'm
going back to
thinking
first
personally,
principles,
which makes me
and
feel
I'm
comfortable in
encouraged that
assuming we're
what
going
we've done
back
in
to
the
all-time
statement,
highs
we're
very
thinking
soon.
about doing with respect to the SEP,
But the reasons for
that
it is gonna
instinct
be,
towards a new chapter
I
is
don't
a
know.
real one, and by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
Go to Enda for the last question.
Thank you, Mr. Chairman. Andy Curran, Bloomberg News. Could you guide us through, please, some of the principles that guide your own reaction function, and tell us a little bit about the kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility
The one thing
enhancement
I
we
do
have in
like is to
monetary
deliver on
policy.
promises.
When
and
we
you want to
deliver on our
stabilize.
price
That
stability
means they
objectives, which
want
we will,
the market to
the
go
American
well.
people
And they want
will
people to
feel as though
comfortable.
the
He's
hardships
not
that they've
comfortable
been
telling how it's
living
gonna
through
happen
in part
because
because
he
of
knows what
inflation
he
the last
says
5
is going
years
to
are in the
influence
rearview
the market
mirror.
as soon as he says
And that
anything.
credibility will have dividends across what we do, and the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
And Mr. Chairman, we've had strong labour data in recent months. How would you sum up the labour market right now? Do you see it as stable and as potentially a source of inflation? Thank you.
Yeah, so the committee, if I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
He gave no absolute guidance on anything other than the fact that they were aware of all the things that the market is worried about. That's funny. Bring back Powell.
Oh boy.
At least he had an opinion. This guy just gave us a bunch of nothing.
So for my fiscal year, on a forecasting bias, I was 4% over forecasted.
Good shit.
Yeah, my metric is within 30%.
Keep it there.
I deserve a raise.
Don't tell me, nigga.
Dude, I asked for it last year, and they told me it wasn't approved by finance.
You know why?
But we got 117% bonus payout.
It wasn't approved by finance because they didn't submit it to finance. You feel me?
No, Winston, come on, dude.
It wasn't approved by finance because it was never submitted to finance.
Well, see, I changed managers. I went from reporting to one boss to four. And then there was a 2-division merger. So I'm wondering if that has something to do with it.
That's what I'm saying. There was more pressing things to go on. So they just responded and said it wasn't approved by finance. It's the easy answer. Resubmit it.
I guess that's good way to look at it.
Resubmit it with your current numbers.
I doubt it's going to happen just because.
Don't tell me what you doubt. Why are you telling me then? Because again, I bear no relevance on whether you get it or not. And listening to what you're saying, I agree with you. You deserve the raise, but I can't give it to you. So if you're going to reiterate the reasons you deserve it, tell it to the people who can make a difference, especially with the fact there was a big restructuring last time. Maybe people are going to be in a more settled place this time and actually at least look at it. It doesn't hurt because it's still on your mind. And again, I can't do anything about it. So if it's still on your mind, that means you need to tell the people who it's relevant to.
Okay, I can do that.
Let me know how it goes. Because again, being within that bracket makes you worth having. You see the relevance. I agree with it. And they know you're an asset, which is why you have your position. You have the job. So now it's just a matter of telling them what you need in order to continue to be the asset you already are.
Yeah, bro. I mean, we cleared $1.1 billion this year.
Love to see it.
Oh my God, SoFi is just tanking right now.
You have 2 weeks.
All right, I won't touch it.
The reason you bought it for 2 weeks out is because you didn't know whether or not it was going to continue to hold the point it was already at. You feel me?
Mm-hmm.
Or else you would have bought it for today and you would have already sold out when it hit its high. Now I'll say this. If the amount that you're down is less than the amount you already up for the week, it doesn't hurt to sell.
So let me check that. I'm still up 20% from last week.
How much are you even down?
In this one contract?
Yes.
$24.
And it was a $90 contract?
Yeah.
Did you decide what percent you were willing to lose before getting out?
All of it.
Well, then why are you talking about $24 if it was almost $100 and you were willing to lose the whole $100?
I mean, I see how much my wife spends on makeup, so.
I'm just saying, the number one thing is sticking to the rules that you set for yourself. So if you said you were going to risk the whole $93 and now you're $20 down and you're like, damn it, what are your rules? You feel me? And this goes for myself as well. You feel me? My rule is 30% up or down. The reason I had the day that I did today is because I didn't stick to my 30% rule. I went 100% on a contract and went to see if I could do more.
Okay.
And that's also why I said when I buy a contract, I have the 30%. If it's $100, I'm going to set a sell for 130 right after. You feel me? So it makes me stick to my rule.
What if this is the start of the downturn for SoFi?
If that's the case, you could take your money out now and get ready for the downside. And what was it that you were looking at? You said you could see that it was bouncing off of VWAP. So is this the bounce to the downside? This could very well be the retrace to 1650. Like I told you, it does 16 to 19. I'm not telling you yes or no. I'm not in it right now. I'm just looking at, I know it's going back to 1650 and I know it can hit 19. And I also know it's a bank. And right now, all the banks are down.
All right, I'll hold through and I'll see what happens tomorrow.
Not a bad idea. Because you still have until the 26th anyway. And if you look at the chart and see the trip that it takes within 3 days in a week, you see that both the upside and the downside are possible. And that's where it comes down to your comfortability and your faith in the play. And with the fact there was a bunch of news just now.
Next down, finance is down.
Everything is down because he didn't answer any questions.
I'm gonna go because I got some stuff I do for work.
All good.
All right, see you, man.